Hello, everyone. This is Ken Lineman, the Chief Revenue Officer at CoreDial. I want to thank the number of folks who have attended this webinar. It'll last for the next hour, and at the end, we'll be taking some Q&A. And in addition to that, we'll be sure to send out the recorded webinar to all of the registrants following the event, probably tomorrow. The real purpose behind this is to take the opportunity to share with our partner community Has anybody been able? I'm not sure if anybody heard me. I think my computer auto muted. So I apologize for that. I want to welcome everybody to today's event. This webinar is intended to provide information around the CARES Act and how it could be helpful to your business during this period that we're dealing with. We're uncertain how much of the partner community has had the opportunity to speak with your bankers and attorneys and accountants. And how much of this you've taken on yourselves in an effort to apply for the various monies that are available to you to help you through this period. And I want to encourage everyone to make sure that you are applying for these dollars. They're intended to be there for you to remain liquid during a difficult period of mandatory closures. And you know, the range of participation that we've seen with the partners we've spoken to varies everything from I've done nothing to I've already applied and I'm expecting money soon. So we brought to the table a firm called DunlapSLK. We have many years working with them here in the Philadelphia area in a variety of ways, ranging from accounting to financial advice to consulting. And so they're going to be delivering this presentation, and we'll be taking Q&A at the end. The presentation is intended to last 1 hour. And with that, I'm going to turn things over to Dunlap. And just before I do that, I'll mention that we will be sending out a recorded version of this webinar in the next day to day and a half, so you can look forward to that. And at this point, I'll turn things over to Dunlap. Thank you.
Thank you, Ken, and welcome everybody. Thanks for joining us today. This is Rob Fairbaugh, and I'm going to be kicking things off with some information on some loan possibilities. As Ken mentioned, we'll take Q&A at the end of the session. If you have questions during the presentation, you can post them on chat, and Tracy, my tax partner, will be helping sort through those, and we'll field those at the end. So with that, I will jump into the economic injury disaster loans. All right, thank you. So this program has been out for a while. It was one of the first ones that came out. It's directly with the SBA. And you can get $2 million in support of the business. It's really for helping with your loss of revenue. And all you have to do to qualify is to show that from 2020's revenue, it's less than 2019's. There's no real threshold. So kind of an easy hurdle to jump over to qualify for this loan. The uses of the loan, you can see there, it's mostly to help you continue to pay your bills, fixed debts, payroll, accounts payable, things that you're having trouble to get your vendors paid. When the payroll protection plan came out, program came out, they said you can't double dip and use the forgivable cost for this program. So Drew will talk about that a little bit later with the PPP loan. You can see the interest rate's favorable at 3.75. If your nonprofit drops down a little bit. And the terms depends on your credit worthiness, but it can go up to 30 years, and that will be determined with the borrower and the ability to repay. 12-month deferral on payments, good for cash flow coming out of this. And then you can see they do require personal guarantees. Depending on the credit that you have, they may require some collateral. And one other piece here at the end, you can see on this screen, you can't have credit available somewhere else. This is kind of last resort for getting additional credit for your bills. Okay, thank you, Drew. You can see here's the pieces of this. Less than 500 employees. Sole proprietors are also available with or without employees. There had been questions about rental properties. If you owned rental properties, were you able to do this? It wasn't listed specifically, but later on in some of the material I read, they talked about if you had a loss of rental income. So if you just had rental properties, this would also cover that. And then it's also for private nonprofits, government agencies and things can't get this loan. All right, next screen there, Drew, thank you. This is just a list of the information that you would need. You go through the SBA and they have an application form, Form 5. The SBA has numbers for everything. And you can see they're just looking for the financial information. Anybody that owns 20% of the entity has to turn in the personal financial statement. That goes back to the personal guarantees. Schedule of debts. And then there's a list of other things that they may want. You can see down here, if you don't have most recent tax returns, they're going to want financial statements, probably a 2020 financial statement. And then they get into the sales and the cost of sales. The reason they want that information is the amount of the loan is generally 6 times your gross profit or 6 times your operating cost is what they're looking for. So you can kind of calculate about what your loan maximum would be. They also want your number of employees. The thing that has gone around with this loan is that when you do the initial application, there's a $10,000 grant. A lot of people filed for the $10,000 grant, said that that was supposed to be a quick way to get cash. If you were in need, you'd have it in 3 to 4 days. Actually, what's happening is it's taking 3 to 4 weeks or more, and now they've cut that back and said that it's not a $10,000 grant, it's $1,000 per employee up to a max of $10,000. So there's been a little bit of, I guess, tightness in cash at the SBA. And even with these loans, if you go through the process and get the loan, the first disbursement is going to be $15,000. There's been such a demand for this that they've pushed down the first disbursement. So I'm assuming the rest of your loan would come over time. I had a client that filed for the grant at the end of March, and he just received notice yesterday about they needed the number of employees so they could issue him the right amount of the grant. All right, you can see this funding in 3 to 4 weeks. Again, they are so backed up at the SBA that might be a little bit of a stretch. Again, it's for paying expenses, not replacement of revenue, even though it's sort of based on that in the beginning. That's what allows you to get it. The credit history is important as far as the ability to get the loan because they want to make sure they're getting repaid. There's a list there of a couple of things that if you were a nonprofit that you would need to get. So you're looking for more information. There's a link at the bottom of that screen that would be on, you could get on the handout, and we'll take you to the SBA website. So that's the EIDL loan in a nutshell. The next one that came out, and this just came out last week, so you can't even really find it on the SBA website yet. They're still getting things together. There was a comment period that ended today for the SBA, and so I'm assuming guidance will be coming out in the next few days. This is for often larger companies, less than 10,000 employees, less than 2.5 billion in revenue, and U.S. based and good financial condition, pre-COVID-19. So again, uses, retain workers. That's a focus on most of the economic help that the government's trying to give us is focused on workers, and then also paying your operational expenses. You can see here the minimum amount of the loan is $1 million, 4-year maturity, and 1-year deferral on principal and interest again. And it's got a floating rate, secured overnight finance rate. You may not have heard of that one yet. That's one from the feds that's secured by treasuries, probably a replacement for liable as that disappears over the next couple of years. Max loan on there, 25 million or 4 times your EBITDA. All right, then the one other loan that wanted to go over quickly is the SBA Express loan. This is a $25,000 loan, no collateral, a little higher interest rate, maximum term of 7 years. Again, it's supposed to be quicker to help you with cash to help your business to survive and to pay for working capital. Fairly easy 2-page application. You go through the bank to get that. And again, that's hopefully a quick turnaround to get you a little bit of money if you're in desperate straits at the moment to keep things going. So that's an overview of 3 of the loan packages that they've put out. And if you got any questions on them, put them on the chat. We'll try to answer them at the end of the session. So with that, I will turn it over to Drew.
Thank you, Rob. My name is Drew Prisky. I'm a shareholder here at the firm. And we're going to be focusing now on the CARES Act and some provisions for that. Everything Rob just discussed was what was all through the SBA, but outside of the CARES Act package. So the CARES Act package has a couple different business provisions that we'll be reviewing here. And we're going to start with the most popular one that many of you may have already even applied for. It's called the Paycheck Protection Program loan. And this is the one that is going to have some forgiveness pieces that we'll get into. So I'd like to start just with a quick recap. There's a lot of information on these slides. You'll see I'm not going to read every piece of it to keep things moving. And we'll go through the basics of what qualifies or who qualifies and what costs are eligible to be used here. So starting off, the Paycheck Protection Loan is for any business that has 500 or less employees. If you are in certain industries, you can maybe have more than 500. The SBA administration maintains that list, but most of the businesses here are going to be limited to 500 or less. If your NAICS code begins with 72, you can have 500 employees per physical location. 72 is food industry and things like that. So that gives you some expansion there. We don't have a slide on this yet because the guidance was literally just released yesterday. So I'm just going to touch on sole proprietors, independent contractors, self-employed individuals. They are eligible for this loan as well. You'll see when we get into this that payroll costs is going to be how they establish this loan, and we'll define what that means in a minute. But Schedule Cs, if you file a Schedule C, you are going to be limited to your Schedule C taxable income, and they are saying that they want the 2019 Schedule C. So if you have not filed that yet, you're going to have to get that done, and they're going to be looking at the net income line there. Unfortunately, it appears right now Schedule Cs tend to reduce their income as much as they can because the self-employment tax is quite heavy, and they tend to utilize that through some depreciation advantages. And it sounds right now like you're going to have to pick and choose. You're going to have to choose if you want to reduce your self-employment income by depreciation and therefore get a lower loan, or if you want to, just depreciate normally or elect a straight line, something like that. and you can possibly qualify for more of a loan. So guidance, as mentioned, just released on that. If you're in that situation, you want to talk with your accountant or your banker about that. Okay, allowable uses for the loan. The main thing these loans are going to be used for is payroll costs. And there's been a wide range of what that entails, but they have narrowed it down on SBA guidance, and it's going to be basically your box one gross wages, and then you are going to be allowed to add back health benefits, employee and employer, retirement benefits, also employee and employer, and payment of state and local tax assessed. Specifically in Pennsylvania, the main state tax that's assessed on an employer is for employee payroll is the PA unemployment compensation, and other states definitely have that similarity. So that'll be the main tax you're allowed to add back in it. You're going to exclude from this calculation compensation in excess of $100,000. The $100,000 piece, it doesn't mean the employee's whole salary is excluded, just any excess over $100,000 will be backed out. And I'll point out here that this law is meant to say $100,000 in compensation. So employer matches of 401k, employer healthcare costs, and things like that are not meant to limit that. So it's just wages paid to the employee. Taxes imposed was a big issue up front because there was a lot of confusion on what this piece actually meant, and the SBA final guidance, basically the simplest way to put this is that employer payroll taxes for Social Security and Medicare are not included. So you can do gross wages and employer paid benefits, but you can't include employer paid federal taxes in the calculation for the loan, or as you'll see for the forgiveness piece of the loan. Your employees must be U.S. residents. So, and then you must, if they're taking the qualified leave payments under the Families First Act, which we're not going to go into detail here today on that act, but that is the Paid Sick Leave and Paid Family Leave Act that passed before this. If you have employees taking payments under that, you're already getting a credit through a reduction of your payroll tax deposits, so you can't double dip here. You can't use these wages to these loan proceeds to pay those wages and get forgiveness on it. So payroll costs, as mentioned, the main thing. Some other things you can use: continued group health insurance. That's already kind of mentioned in payroll costs above. We're not quite sure why they separately felt the need to mention it here. Payments of interest on mortgage obligations. It must be interest, not the principal, and it cannot include prepayments. So your mortgage obligations, just what you would normally pay each month. Rents, utilities, interest on any other debt obligations that were incurred before the coverage period, and we'll mention it here, the coverage period is February 15th to June 30th of 2020. So that those are the eligible costs you can use the loan for. So as mentioned, that's the coverage period, February 15th through June 30th. The loan application must be submitted by June 30th. A big question has been, you'll see in the forgiveness piece, you have an 8-week period to utilize this. So the question is becoming, well, what if I don't get my money till May 15th? How does that 8-week period work? Because it would carry me beyond June 30th. And that piece is up in the air right now, but our opinion at this moment is it's probably not going to matter because the money is going to be gone by then. So most people will have already submitted applications for this and will be getting their funds prior to May 1st, hopefully. So this was just a note that businesses and sole proprietors could begin. Sole proprietors were deemed people who may have filed a Schedule C but actually had employees they paid. They could have began applying it April 3rd, and self-employed with no employees, subcontractors, could begin April 10th. A quick calculation of how you do this is you're going to utilize, the bill had said previous 12 months, the SBA guidance came out and said you could pretty much use either or. That was kind of the final landing point. You could use the previous 12 months, or you could use your 2019 calendar year payroll data. And you would basically add up your total payroll costs that we just discussed, and then you would multiply, if you were doing that on a monthly basis, you would multiply it by 12, or if you were doing it on an annual basis, you'd have your total. You're going to take that number, divide it by 12 to get your monthly cost, and you would multiply that by 2.5 times. So they're giving you your average monthly payroll costs multiplied by 2.5 times, and that's the maximum amount of loan you'd be eligible for. Or it'd be capped at 10 million. We're not seeing that as being too much of an issue. If you were not in operation as of February 15th, you would use your average payroll costs from January 1st to February 29th. That would kind of be if you're a seasonal employer or if you had a new business. Your business must have been in operation though as of February 15th. So any new businesses that might have started after that date would not qualify for this. The main benefit of this loan compared to any of the loans Rob discussed is that all the typical guarantees and waivers are not present in this loan. Fees are waived, guarantees are waived. There's no collateral. There's no recourse against any shareholder. Doesn't matter if you could obtain credit elsewhere, and there's no prepayment penalties on anything not forgiven. Just keep in mind, this all applies as long as you're using the proceeds for one of those eligible costs. If you get the loan and decide to use it for something else, you may jeopardize all this when the bank goes to analyze the forgiveness and term it out. So, but if you're utilizing it for the cost, this should all apply, which is obviously a very, very nice benefit. The maturity and interest rate, it's going to be termed out 2 years from the date of forgiveness. The banks are back and forth on that right now. This loan, you'll see on the third point, jump in there a second, that the loan repayment, including interest, will be deferred for 6 months. So that's from when you get the proceeds, that 8-week period that we're going to talk about in a few minutes, the bank's period to decide forgiveness. The loan, any loan repayment would all be deferred there, anything that's not forgiven. The banks are back and forth right now on whether or not that's going to be included in the 2 years, and therefore you might only have 1.5 years to pay it back, but it'll be somewhere between 1.5 years, 2 years, depending on where they settle on that. But it won't be beyond 2 years, and the interest rate will be at 1%. I'm definitely not going to read through all these, but the two I want to point out here, the borrower requirements: you must make a good faith certification that the current economic conditions make it necessary for the loan request and in keeping your ongoing operations. And you need to acknowledge that the funds will be used to retain workers and maintain payroll, as well as these other uses: mortgage payments, lease payments, and utility payments. You also can have other loans under this program. So that's a quick background on the loan itself and how you calculate what you're allowed. And as mentioned, most banks and businesses are probably already in that process. Some of you may have already gotten the funding already. So the bigger question is the loan forgiveness. How am I going to calculate what's forgiven at the end? So this section we're going to tell you, I'm going to spend some time telling you what we know right now. And if you have questions, please ask them. I'm going to start with a blanket statement that the forgiveness guidance is to be forthcoming from the SBA. The bill itself said from the date of enactment of the bill, the administration, which is the SBA itself, would be releasing guidance within a 30-day period from date of enactment. To date, we haven't received all that guidance. So we're just telling you what's in the bill right now. And the guidance will hopefully be here. The date of enactment of this bill is March 27th, I believe. So by the end of April, we should hopefully have a clearer picture of what this is going to look like. But let me tell you what we know now. So to start with, the date you get the loan proceeds in your bank is supposed to be the beginning date of your 8-week period. And what that means is it doesn't mean you can't use the loan for eligible costs outside that period. But if you want it forgiven, it's got to be within that 8 weeks. So simply put, if you got your proceeds today, April 15th, for sake of argument, you need to utilize those costs by June 15th if you want it forgiven. If you can prove at the end, the reason the program extends from February 15th to June 30th is if you can prove at the end that you used it for eligible costs prior to getting the funds, like submitting payroll records or rent and interest payments from a period of February 15th until you get the bill, until you get the money, that should be considered an eligible cost, but it will not be forgiven. So that's, if you're curious as to why the period is February 15th to June 30th, that is the reason. So 8 weeks, need to keep that in mind. You're eligible for forgiveness on payroll costs, as we already described, interest on mortgage obligations, rent, and utilities. Although an eligible cost is for loan interest on other debt obligations, those costs will not be considered in the forgiveness calc. So you can utilize it for them, but might not be forgiven. Won't be forgiven. Right now, we know at the end the borrower would submit an application for forgiveness that's going to include the number of full-time equivalent employees, payroll and payroll rates. You'll probably have to provide your payroll tax filings, and then you'll have to submit canceled checks, receipts, and other documentation verifying payments of interest, rent, and utility. So the key here right now is documentation is a must to qualify for forgiveness. Now, we say that not to scare you. In my opinion, this should be stuff as a normal business owner you already have. You should not be reinventing the wheel to create this documentation. Cancel checks, bank statements should be pretty easy to provide. You should all be filing your payroll taxes, payroll returns as is, so that documentation should be there. Your payroll company may need to provide you with a register for certain time periods, and they should be able to do that. The payroll companies are well aware of this bill and the documentation that their clients will be requesting. Once you submit that application, the lender shall issue their decision within 60 days. Forgiveness would not be included in taxable income. That is what the bill says. The IRS, you may hear creepings that the IRS is saying we won't charge it, we won't include the forgiveness in taxable income, but you may not be able to deduct the expenses. The Congress is aware of that right now. They're discussing a plan for that because that would obviously defeat the purpose of the forgiveness. But just be aware, if that's what you're hearing, that's what they're talking about. So the reduction, once you've submitted or once you have your number for what you would like to be forgiven, you first need to look at a couple things. The first one is going to be what they call full-time equivalents. Simply put, if you got people working 40 plus hours, that's one full-time employee. If you have people working part-time, you're going to have to do a calculation of hours for them. And actually, I said 40 hours, but I've even been hearing that 30 plus hours would be considered full-time. But if you have people working less than 30 hours, there will be a calculation coming for how you consider. The pretty straightforward example would be if you have two people working 20 hours a week, that would equal one full-time equivalent. So the important piece is they're going to look at your full-time equivalency. You have a couple different periods you can look at. If you're at your discretion, the borrower's discretion, you can look at your full-time equivalents from February 15th to June 30th of 2019 and compare that to February 15th to June 30th of 2020. If you have a reduction, basically if you had 20 employees during that period and you have 15 employees now, they would be planning to take that and saying, okay, whatever you're applying for forgiveness, 25% might not be forgiven there. You can also look at the period of January 1st, 2020 through February 29th, 2020. If that's a little more favorable to you, you will have that discretion. And if you're seasonal, there's a carve out for you there as well that you can look at certain periods. I believe I don't have it on the slides here, but I believe you can look at it during a similar seasonal period there. So that's the first piece. And then if you have employees who make less than $100,000 and you've reduced their pay by more than 25% from the previous quarter, the big open item here is they say if during that 8-week period you've reduced somebody's pay by more than 25% when compared to the previous full quarter, then you could have a reduction of forgiveness there. The issue with that is a full quarter is 13 weeks and this period is 8 weeks. So they're aware of that. We're expecting more guidance to be released on that. Because obviously if you could only use the 8 weeks and compare it to total salary paid in the 13 weeks, you're going to have a reduction of pay and it definitely might exceed 25%. So it's our position that the intent of this bill, this reduction is you can't get this loan and not bring your employees back. That's kind of where they're going, back to levels that they were pre-COVID. Otherwise, you're not going to have it forgiven. If you currently have a reduction in employees from the period of February 15th through 30 days of enactment, again, that'll be around April 26th due to layoffs, and you bring those people back by June 30th, there's no reduction. Again, I want to pause here and say that this is an area of concern as well, because as people are starting to get their funding now, and if you already have your funding now, that period would run April 15th to June 15th. You know, and is this bill really saying if I can leave my employees on unemployment and bring them back June 16th and then I'm whole? You might satisfy the full-time equivalent issue there. You'd still probably have to pay them some sort of salary. So I think they're just putting this in there more to say that there's a period you can bring them back. It's our position. I'm advising my clients specifically, like, you're planning to utilize this. Once you get the proceeds, try to get them off unemployment if they're on unemployment. So if you plan to have want the majority of the loan forgiven, that's what you're going to need to do. And there's another caveat here that the SBA had released that said, in addition to whatever you get for the loan, in addition to the 2 reduction pieces that I just mentioned, they're also going to be looking at what did you utilize the loan for, and 75% of the loan proceeds you got must be used on payroll costs. So that wasn't in the bill, but due to the high volume, SBA made that decision and said that when they're looking at the forgiveness, the rent, the mortgage interest, the utilities, you can utilize it for those costs, but they can't exceed 25% of the total loan that you're requesting forgiveness for. Finally, if you have received that $10,000 grant that Rob was mentioning under the EIDL, your forgiveness will be reduced by that amount. There's no guidance at this point of, well, what if I use that $10,000 for something else? That seems to not matter at the moment. If you got the $10,000, you're going to have your loan forgiveness reduced. So that's the summary of the Paycheck Protection Program. As mentioned, you can be posting questions in the chat. I'm going to move on to a couple other things that are available to you. One is called the Employee Retention Credit. So everything we've been talking about up through now is loan related. These next few things are not necessarily loans. They're credits or deferrals that you can take. So the first one is the Employee Retention Credit. And the key here, I'll mention the 5th bullet point first on the slide, that you must not be utilizing the Payroll Protection Program. If you want to take advantage of this Employee Retention Credit and you already applied for or getting the funding, you're not going to be able to utilize this. And as we're seeing it right now, you can't utilize this until you get approved for funding. If you are planning to submit the application or have submitted the application and are waiting, you can't utilize this credit. But if you're not, this is a summary of what it is. So it's any business that was in operation during the 2020 calendar year, and the employer's business is fully or partially suspended by government order due to the COVID-19 outbreak, or if your employer's gross receipts have fallen below 50% from the comparable quarter in 2019. So as we're into the second quarter here, once your receipts gross receipts fall below 50% of the second quarter of 2019, you could be eligible for this, again, if you're not taking advantage of the Payroll Protection Program. And you would be able to continue to utilize this credit until your receipts went back to within 80%, and then you would no longer qualify anymore. Not-profits, just quick, not-profits are eligible for this, but it's pretty much just based on the fully or partially suspended government order. If you have a reduction of donations or revenues, that second part here, you're not able to utilize that. So a couple things to consider here. If you are a life-sustaining business and you're in full operation, including telework, I'll give you an example. Our DunlapSLK here, we are able to telework and we're in full operation. So we would not qualify for this credit regardless of the employee limits we're going to talk about below. The only way we would qualify for this if we were not utilizing the PPP program is if we met the gross receipts test. So partially suspended is where it comes into play. It means that you have some people working and others who aren't, or everyone is working reduced hours. So you're staying partially open, but not at your full capacity. And just a couple of examples, you can think of restaurants that are offering takeout only, but maybe don't have their waiter or waitresses and staff there. Contractors is a big one right now because some of the jobs that they may do are for a life-sustaining business. So they may be able to stay partially open, but have other jobs that are shut down. So they would then qualify as partially suspended. So if you have already met the gross receipts test, or if your business is fully or partially suspended, then you're going to look at your employee limit. If you are over 100 employees, you must be paying your workers while being fully shut down, and the workers cannot be working. So if you still have people that are partially working and you're over 100 employees, they're not going to qualify. It would only be the ones you're not paying, or that you're paying but are not working. If you're under 100 employees, again, you still must be paying your workers while being fully or partially shut down, and it doesn't matter if they are working or not. So the key to point out here, in my opinion, is that you must be paying your employees. If your employees are currently on unemployment and you're going to leave them there until your state is no longer in a shutdown order, you're not going to qualify for this credit, once you're back to work. So it's while we're being shut down. So, and the reason being in full operation doesn't apply is if you're in full operation, you're not under a shutdown order then. So the coverage period for this program is wages paid between March 13th and December 31st, 2020. We're a Pennsylvania-based accounting firm here, so just to note that our governor's shutdown order was not enforced until 8 p.m. on March 23rd, so in essence, March 24th would be the eligible date for PA that you could begin taking this credit. The IRS is working on guidance on what to do for that, March 13th through March 31st period for those it applies to, because the payroll returns and stuff like that, we're not ready to handle this. So some of it might be coming, this credit that you're going to get will most likely be coming in the second quarter. So what is the credit itself? What do you actually get out of this? So you're going to get 50% of the wages paid by employers due to the COVID-19 crisis on the first $10,000 of qualified wages paid to an eligible employee. And it's going to be a max of $5,000 per employee, and that's in total. So when you think back to my wages, I might qualify for this in different quarters. If I've already received a $5,000 credit for one employee in the second quarter, I'm not getting it again in the third quarter. It's a max of $5,000 per employee. Your wages cannot exceed what they would have been during the 30 days before the period. So don't think you're going to be able to give everybody raises here and get the government to pay for it, in essence. You'll be able to include health insurance costs there. So if you're not already hitting that just on the wages itself, you'll be able to include health insurance costs. And the key here to remember, this is full and part-time employees. So how are you going to claim the credit? If you're already familiar with the Families First Act, it's going to work exactly like that, but I'm going to explain what that means here. It's you're going to pay the payroll as you normally would, their hours, and then when you go to make your 941 deposit, which is your federal Social Security and Medicare wages, taxes, you're going to be able to reduce that payment by the wages you're paying. So for instance, if your 941 deposit for the company as a whole is $10,000 for a particular payroll, and you've paid an aggregate of $4,000 of these type of wages, you would be able to reduce the 941 payment down to $6,000, and that's how you would get the credit. If you're, again, in this example, if you have $10,000 941 payment and you had a bunch of employees that you've already paid, and you've paid $12,000 in wages, well, you wouldn't make any payment at all, and you'd actually be able to request a $2,000 refund from the IRS. I pause there just to say that when you're a 941 depositor, most likely if you got a decent sized payroll, you're either paying it right after your pay period. So if you're weekly or biweekly, it's happening pretty quickly. The IRS is saying these refunds are going to take up to 2 weeks to process. So I'd recommend that if you're weekly or biweekly, just let the credit carry over to the next 941 deposit and don't bother with a refund request, because you're going to have to fill out a separate form for that. So that's the employee retention credit. Again, key to take away here, though, is this is only available if you're not utilizing the payroll protection program. So another option available to you is a delay of employer payroll taxes. This one, there is really no size limits on. It's who's ever eligible, any size business, as long as you're remitting Social Security tax payments. Now, this also originally said that the business must not be utilizing the Paycheck Protection Program. However, recent guidance by the SBA and the IRS state that you can utilize this deferral up until your loan forgiveness is approved. So if you have applied for the PPP loan and you're A, either waiting, or B, already in your 8-week period, well, up until the end of your 8-week period when your forgiveness is approved, you can take advantage of this. So the covered period here is the date of enactment, March 27th through December 31st. This is if you're not on the Paycheck Protection Program, you can do this through the end of the year. The second quarter 941s are going to be, when this guidance was released, they mentioned that the second quarter 941s are going to be adjusted for payments of these taxes made from March 27th to March 31st. So we're not sure if that'll look like an actual refund yet or just a reduction of other payments that'll be available to you. But that's coming for those 4 days there. What are you deferring? You're deferring the employer portion of Social Security taxes. It does not mention Medicare. So it's the 6.2% and only the employer portion. And you're going to repay it. You're going to run this all the way through either your forgiveness period or through the end of December 31st. And you're going to then take that total and 50% of that. So if you deferred $100,000, 50% of that needs to be repaid sometime in 2021, by the end of 2021. And then the remaining 50% needs to be repaid by 2022. They haven't released guidance yet on how that payment's going to work. Our best guess at this point is it would be some sort of additional payment with your normal 941 payments in those years that you might be able to spread out over a number of weeks. My guess is you probably also have the ability to pay it in one shot. Just remember on these taxes, these are what they call trust fund taxes. As an employer, you are on the hook for these once you pay your employees, whether you go out of business or not. So if you're going to take advantage of this, just be aware that if you choose to defer and heaven forbid this rough patch continues here and you have to close doors permanently or whatever, you are still going to be on the hook for these taxes. So, but it is interest free. I mean, there's no interest on this or anything like that. So even though they're not giving you a cash as a loan, I mean, think of it as a loan that you're deferring payment on. So the last section, and then we'll get to some questions here. I just want to breeze through this, as I know most people here are business owners themselves, but just so you're aware, I thought it'd be relevant that you know, everything we're talking about is keeping employees working and keeping you paying them through some sort of program that the government's going to forgive potentially, or give you a credit on. But just a reminder that, you know, unemployment still is an available option. So I'm going to fly through the pandemic thing here quick, because what this piece is specifically talking about is basically that self-employed individuals are eligible for unemployment now. Typically, they were not. Self-employed business owners, officers of corps, usually were ineligible for unemployment. They've expanded to say that you are now eligible. The reason that's important is, as you've probably gathered by now, the options are limited for self-employment people. Self-employed people, they're going to be, if they don't have any other employees, they're not getting much out of that $10,000. If they try to reduce their income, they're not getting much out of that payroll protection program. So they can't take payroll, so they can't take the retention credit, or they can defer the taxes. I forgot to mention that. They can defer the employer Social Security on their 1040 when they go to file in 2020, but that's about it. So this is just stating that unemployment is available now for self-employed people. So I'm going to skip these couple slides here. You can read them at your own leisure. What I want to focus on is the increase of the unemployment compensation benefits, just as something your employees could be eligible for. So who is eligible? Any state that desires to enter into agreement with this section. We're not seeing any reason why any state would not enter into this. The coverage period is going to be from the date they do enter that through July 31st. And the amount of assistance, what's being expanded here is the amount of assistance is whatever they would normally get from the state, your employee would get that. The additional, the federal government is going to supplement an additional $600 per week on that. The big kicker here, and this is one of the reasons this bill took a little while to officially pass, is you could potentially have people making more on unemployment than they were at their jobs with this $600 a week benefit. There's no cap for what you normally make. So just be aware, if you have employees on unemployment already and they're getting this, it's going to be a battle, I think, to potentially bring them back if you get the Paycheck Protection loan. So the allowable methods of payment is just saying the state, it's going to run through the state still, and they're going to be they're going to have a couple different methods on how they can pay it out, either as part of your normal check or a separate check. And if you are somebody who utilizes Medicaid or CHIP, this federal pandemic unemployment stuff is not supposed to affect your eligibility on that, because there's usually some income limits there. The other piece of unemployment to remember, if you've had to lay off employees because of COVID-19, this is not supposed to be affecting your employer SUTA rate, state unemployment rate. They are supposed to, if it's due to COVID, if the layoff is due to COVID, then it should not be affecting, and you should not be seeing an increase in rate. I'll say that strictly that we know that for Pennsylvania. I believe that would be the case for other states, but we ourselves have not confirmed that yet. So, but that seems to be the general consensus. So, with that, I know we threw a lot at you, and we definitely wanted to leave some time for questions here. So. Tracy, our tax partner, is going to be, she's been reading through all your questions. And Tracy, I'll turn it over to you, and Rob and I will do our best to answer what we can.
Thanks, Drew. We have a couple good questions here for you. The first one is, our staff is all 1099. Will we be eligible?
So the 1099s, specifically in the SBA guidance that was recently released, excluded 1099 payments. The bill had originally said that you could include those. The SBA guidance unfortunately said you cannot include 1099 payments. So unfortunately, if that is your situation, I'd still recommend just double checking with your lending institution if they would accept that, but we're hearing that the SBA would not. So there's unfortunately a good chance you'd be denied there.
Okay, Rob, can you apply for the economic injury loan now, or do you need to wait until the end of 2020?
You can apply for that now. The program actually ends at December 31st, 2020, so you have up until that point to apply for the loan.
Okay, and I thought I recently read that they had waived the personal guarantee for the idle.
Yeah, that was real recent, but it was only for loans $200,000 and less. They did not waive the requirement for collateral for anything over 25 possible collateral. That's when they're looking at the credit and the borrower's ability to repay. But yeah, the personal guarantees for all loans under 200 have been waived.
Great. And how do you check on the loan application to see if it is being processed?
That's a good question. I have not had anybody heard anything until they get a correspondence back from the SBA. The one client I mentioned, that was 3 weeks ago. He applied, didn't hear a thing, didn't see any money, and got a notice yesterday asking for a little bit more information. So I don't know of any way to check while they're processing the loan.
Rob, if I can just hop in there quick, I do think you are, I think you are, when you submit that application, supposed to at least get a confirmation number that they know it was accepted, or that your application was accepted, that now they're going to process it. But I'm on the same boat as you are with, you know, our client base in general has submitted this, maybe got that confirmation number, and then heard nothing after that.
Okay, Drew, back to the PPP loan. Does the PPP include disability insurance or other business insurance payments?
It does not. It's workman's comp, disability. The only insurance piece it covers is health insurance.
Okay, someone's bank is saying the interest rate is 0.5%, not 1%. Is the bank or state specific?
So no, as we understand it, no. The reason that's been floating around is the bill originally said a maximum of 10-year term and not interest not to exceed 4%. All of a sudden, some rumblings came out that said it's only going to be 0.5%, but once the SBA released the guidance, they upped it to 1%. So there was a small window of time where everybody thought it was only going to be 0.5%, but it's the guidance that was released is not supposed to give lending institutions any sort of discretion. It's everybody's on the same, you know, again, the same boat on the terms and interest rate.
Okay, and we have someone here with a subchapter S corporation that takes no wages, so no W-2 files. I only take disbursements at the end of the year. Can I still get the PPP loan and or the $10,000 loan?
The PPP loan is going to be a no, probably. They're not looking at disbursements from everything I'm reading. You know, that's a question. We don't want to go too far down the rabbit trail here, but you probably want to be talking with your accountant just about the logistics of all that. Unfortunately, the Paycheck Protection Loan is based off either W-2 income or if you're self-employed, self-employment income. If you're we didn't talk about partnerships. If you are a partnership, they are going to be looking at K-1 income for partnerships, but not for S corps. And Rob, I'll kick it to you for the EIDL. I think you still could maybe apply for that, but do $1,000 there.
Yeah, you're limited on what I just saw yesterday from the client that got correspondence from the SBA. You're limited to $1,000 per employee, up to $10,000. So if you've got no W-2s, my guess is you'll get nothing on $10,000 grant as well.
Okay, Drew, you brought up the partnerships and self-employment, and we have here a two-owner LLC being paid guaranteed payments on 1040 Schedule K1. Is any of this covered by PPP?
I believe that piece would be, and I think there hasn't been a ton of guidance released on the partnerships specifically, other than to say that they're qualifying and looking at K1 income. They weren't real specific if it was the box one, ordinary income that's, subject to self-employment. So guaranteed payments could be a part of that. They didn't specifically mention that. I'd suggest on that one, though, if you're interested in applying, talk with your lender and see what the banks are saying there. But I think you would be eligible to apply. And in any of these where there's a bit of uncertainty, I think it still makes sense to apply and do what you think, do what you think is correct there, because all the banks can do is say no. That's kind of the worst case scenario. So.
Okay, and when do you have to submit your application for forgiveness?
You are supposed to submit it at the end of the 8-week period. There's not official guidance that it's got to be like, okay, 8-week period is up June 15th, and I need to have it in by June 16th. You'll have a period of time there. The bill right now is saying through June 30th. That's why there's some uncertainty there on, well, what happens if I don't get my loan proceeds till May 15th? Because at that point I'd be running until July 15th on my 8 weeks. So I'd say get it in as quickly as you can, but I'm not seeing a scenario where it's going to be like, the next day it's got to be in, otherwise you're not forgiven.
Okay, great. Well, we have some great questions there. Thank you, Drew and Rob.
Well, if that is it, that could not have worked out better, because it is exactly 2 o'clock. The last slide's been up here for a little bit. Like I said, we know we've thrown a ton of information at you. We'd still love to assist in any questions you have. We set up a specific email address for coronavirus questions. So if you have something that you think of after we hop off the webinar here, or anything like that, you can email them to coronavirus@DunlapSLK.com, and we will get back to you. We're going to try to tackle that daily. So we'll be responding daily to those questions as things arise. With no further questions, on behalf of Rob, Tracy, and I, we want to thank you all for your time today, and we hope this offered some clarity into what's available to your businesses as we all try to stay the course in these coming weeks and months. I want to express a special thanks to Tracy for monitoring these questions, and a sincere thank you to the entire CoreDial team, Jeff, Ken, Martin, Lisa, if I missed anybody else, the whole entire team for setting this up. We really appreciate the opportunity to talk with you all. As mentioned at the beginning, the recording of this webinar along with our slides will be sent to you the next day or two. And I'll refer you back to our website as well, which is www.DunlapSLK.com. There's a banner right at the top of that screen that'll direct you to our entire COVID-19 Resource Center. And we have a bunch of postings, more in-depth analysis on some of this stuff. Some other webinars we did, if you are interested in hearing about the Families First Act, we did a webinar on that that's posted there. It'll take you out to our YouTube page, and it's called What PA Business Owners Need to Know. You can check that out. If there are any other changes or new developments, one thing we didn't mention at the beginning, quickly mention here, is that guidance is changing daily on this. This is why it's been such a complicated bill, as the bill is passed and stuff is changing daily. So we are doing our best to stay on top of that and posting any changes and developments on our website. So we ask you to check back with that. So again, thank you all very much, and stay safe. And I'll turn it back over to the CoreDial team if you guys have any final comments.
Yeah, thank you guys. It's Ken here. So I just want to echo the comments that were made earlier. We're glad you guys were able to attend. Hopefully it was valuable for you. Please reach out to the Dunlap team if you have questions. We talked about it in the beginning, and they're prepared to help you guys in ways that are possible for them. And just to reiterate, we will send a recording along with the slides in the next day or two. So if you had some problems attending or connecting or with choppy voice or whatever it might have been, don't be concerned. We will get that out to you. And with that, we're going to go ahead and wrap things up. So thanks a bunch for being here today.